Good morning and welcome to the XM.com weekly market update. With me again is Peter Mcguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Well, the election
What a week.
came and went in a flash, didn't it?
It sure did. It was very decisive and we've moved on since then.
Yeah, and I think the markets, because it was decisive, whichever way it was going to go, the markets obviously liked it.
Yep.
There's been some pretty strong rallies over the course of the last week. So
100%.
yeah. All right, China, CPI numbers came out this week, another low number, 0.3. They had some more stimulus came out earlier in the week, which was greeted with not
Bit
much
of a wet towel.
Yeah, not much enthusiasm at all.
No.
So, plenty of issues still there.
Yeah, exactly. But you can't discount the large move that you've seen in Chinese equities over the last couple of months, up nearly 25 to 30%. The CSI 300 is nudging on 4,100, was at 32 or 3,300. So that's been very, very strong. You haven't got away from the debt bubble. We're conscious as far as domestic demand needs to be the engine that they drive in China, and that's up to them how they do it. That's not up to anyone else. We can't. They've got their own agenda, yes. And with President Trump now and sanctions, not sanctions, tariffs,
yep.
And I'm not sure exactly what number they'll run at, but they're going to be introduced pretty quickly after January 20. So yeah, China's got their hands full over the next couple of quarters. They've got to really get this number up.
Yeah, they sure have, and that obviously affects Australia as well. So the Aussie dollar is coming, not considerable, but it is coming under a little bit of pressure. I think in the local market, CPI is coming down, so there's a lot of expectation about the next move in interest rates. You would think would be down, but when is the big question?
Sure.
But you would sort of think because of that, the Aussie dollar will be under pressure, also with the US dollar so strong as well.
Yeah, 106, nudging on that 106 handle. It's been extraordinary over the last couple of days. And so, yeah, is the Aussie going to be a 64 handle? Is it going to be, low 65s? I'm not sure how much further US dollar index goes, but at the moment it seems to be one-way traffic, which in turn pushes the Aussie lower.
Certainly does. Interestingly, early this week, NAB brought out their business confidence surveys, the best number since January of 2023. So
that's promising.
Yeah, it is. Like if you look at those numbers over the course of the last 12 months, they've been pretty bouncing around quite a bit. But I think the confidence wasn't great simply because the interest rates were at a much higher level and there was a lot of pressure on the local economy.
100%. I mean, just hopefully that can continue over this summer period.
Yeah, we'll see how we go. The yen.
Whew. What do you say about it? Is it on the road to 160? Are we looking for further intervention? You're looking at possible interest rate hike in December from the Bank of Japan. And as we've just discussed, US dollar, at that 106 handle, yen nudging 155. It's been, again, probably the market to trade if you're a currency trader. Yeah,
and I think we've got the GDP numbers out later this week in Japan as well. So whether or not that affects what the BOJ does in terms of a rate hike, time will tell.
Yeah. Strong Nikkei, by the way.
Yeah, for sure. This is only 1 week chart, but this is some of the major asset classes since the election. So obviously, Bitcoin's a bit of a standout.
Yeah, just a touch. I saw CNBC touch 90,000 or may have got through it. So, yeah, what do you say? It's just mind-blowing from 66, 67,000. It's put on, 35%. And when you're seeing that S&P, it's had a nice little rally as well. I mean, you can't dispute, and dollar index, I mean, just gold got crushed.
Yep.
It's down the best part of nearly $200 from its peak of 2,800, just nudging on 2,600. So not in that window of time, but certainly over the last month.
But generally most markets have been very positive in the last week, which on the back of their results. So
yeah, I mean Dow. Look, S&P went through 6,000. I know it's under that now, but that's just the velocity to get from 5 to 6 was unheralded.
And the Nasdaq was
turbocharged.
Yeah, the Nasdaq was hitting all-time highs as well.
Yeah.
So, once again, this is always a good chart. The bond market it drives pretty much everything, but it's really interesting how you get in the short end of the curve coming off and the long end of the curve going up quite a bit.
Yeah, you bet. 70 basis points up since September when they cut that 50 basis point cut by Fed Chair Powell. So that's a 70 basis point move is very unusual in that short window of time. And the other side is that US dollar has just been, showtime.
Yeah.
So all of those factors going in, do we see a 4.5 to 4.7%?
And it's sort of interesting how the 2s and the 10s are tracking one another,
Yeah.
considering they're 8 years apart.
Yes.
And 2 years down the track is not that far.
No, well, they've really compressed at the moment.
Which basically sort of the market's saying, well, in 2 years' time, we're going to be, interest rates will be either close to where we are now.
Yeah. If you look at that chart, this is the first time we've seen divergence. Traditionally, the red, which is the 2-year, has been significantly higher than the blue, which is the 10-year, and now the blue is higher than the red.
Yeah, I know.
And it's been that way for the best part of probably 7 weeks.
Yeah. That's a 1-year chart there, and that's quite volatile for a bond market, considering the prices don't move much.
No,
So,
and that's why the old futures traders, they love that bond market. They live and breathe it.
and it pretty much affects everything.
Yep,
The cost of money affects all these other asset classes.
exactly.
So it's plenty going on. We've got numbers out this week. I think the CPI in the US is out this week, which I think is pretty much expected to be flat.
Yeah, it could go up a fraction.
Yeah. So,
But yes.
But we had obviously the interest rate cut in the US, which these days it's like,
Yeah.
whatever.
Shrug of the shoulders.
Yeah. It's a
The
little bit
UK
like-
as well.
Yeah, that's right. Yeah. So it's certainly coming down in plenty of these economies.
I want to see what happens as far as the ECB over the next couple of weeks. Germany's really under some big pressure from a commercial standpoint. Manufacturing's well down, demand is down globally. So how does Germany play into that being the engine of Europe? So maybe the ECB's got to be far more aggressive as far as cuts.
Yeah, there's plenty of weakness in those. Italy as well, and France,
Spain.
Yeah, they're all the same.
Yeah.
So,
Once tourism goes and it gets into a winter, it's pretty tough.
it could be. Yeah. All right, we'll keep an eye on things and regroup next week.
Look forward to it.
Great, thanks, Pete. And that's the XM.com weekly market update.